Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, July 26th, 2019 edition of DecisionPoint with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right. Dad is there. How are you doing up the hill, Dad?
We're doing pretty good up here.
Yeah, it's not any cooler though, is it?
Nope.
No. All right, well, let's go ahead and get started. I've got my fan running in the background, so I should be able to stay cool. And we're going to cover, as we usually do on the Decision Point show, I'm going to look at broad market indexes and price relative with the S&P. We will also have our weekly review, and I will look at all those scoreboard indexes. There are a few signal changes I want to make you aware of. The DP indicators, of course, we'll go through those in 3 time frames. DP Sentiment ChartPack, I want to show you how you can get my sentiment charts that I do on Market Watchers every Monday. And then Carl will be going over the big 4, dollar, gold, oil, and bonds, the daily and weeklies. And then bonus is always Carl's grab bag. So interested to see what you're going to have to show everybody this week. But let's go ahead and get started. We'll look at the sector scoreboard. And as you can see, the only red on the chart right now is a sell signal in the long-term trend model for XLE. And that means that the 50-day EMA is below the 200-day EMA. That's what gives you the sell signal. So when you're looking at all these buys, you know that the 50 is above the 200. With the intermediate term trend model, this is all about the 20 and 50-day EMAs, and on buy signals, that means the 20 is above the 50-day EMA. All right, we do have some changes to the scoreboards, but I'm going to show you those in 1 minute. All right, but we're going to go ahead and get started with the price relative chart. And, you know, the Dow had been leading and outperforming quite a bit at the beginning of July, but wow, it's really fallen off a cliff this last week. There were some poor earnings reports that came out for Caterpillar and Boeing, and I know that so it's been dragging the Dow downward, and so that's why we're seeing that underperformance in comparison to the S&P 500. NASDAQ is still on a nice roll, outperforming just somewhat from the S&P 500. OEX is performing pretty much the same, although you can see today we did get a move to the upside there, some outperformance showing with the OEX. And S&P 400, look at this, we're finally starting to see a little bit of movement off of the relative lows. And you know, the S&P 600, we're getting there. It is starting to show some improvement, but I really liked the look of the mid caps price.
Let me interject something
Sure.
here. Today, I don't know how it closed, but Alphabet, Google, was up like 10%. I don't know how it closed, but there was quite a disparity between the industrials and the S&P 500. And that was caused by the fact that Alphabet is in the S&P 500, the cap weighted average. So it influenced today's reading pretty heavily. It is not in the Dow. So the Dow actually didn't look as good as the S&P 500 today.
Right.
And it explained that little curly Q at the end of the OEX.
Right there.
Relative strength, because that, of course, Alphabet is in
yes
100 as well.
That's, and just like I was saying with the earnings too. I mean, with the Dow especially, it only takes a few stocks to cause a problem, but the S&P 500 with those cap weights, with, like you were saying, Google, you know, the FANG stocks. So that would certainly drag the S&P 500 around as well. All right, here is the, I wanted to look at the price charts for the broad market indexes. And one of the things that I want to point out, that I've been pointing out every week, is that, we've been making new all-time highs on the SPY and on RSP, the equal weight. And the problem we're seeing is that the S&P 400 price chart and 600 are still so far away from their previous all-time highs. And that's what needs to be corrected. We're just not seeing, look at this. It's been in a trading range, the S&P 600 ETF for, well, since March, really, is when we started forming up this trading range. So meanwhile, you have these moves on the S&P 500 that are showing these nice moves and improvements there. So that's the main information that I wanted to.
And also on this one, RSP, yes, that's the equal weighted S&P 500. Notice that it did not make a new all-time high today.
Yep, and that just proves the point with Google having such a great blowout day, that when you equal it out, that's why you're not getting as much of a price rise. Excellent point. Global markets, looking at the global ETFs, and you can see that really the Canadian ETF is working on getting back to all-time highs. We're still in declining trends for the EWG, and we are just now seeing some improvement on EWQ, the French ETF. Did get that breakout, but we are from that declining tops trend line, but we still haven't gotten back up to all-time highs. Excuse me. UK, EWU, look at the difference. This reminds me of the S&P 400 and 600, very far away from the all-time highs and still in a declining trend since those all-time highs. Same with the Japan, EWJ, India, and China. They're all still in a declining trend since their all-time highs. All right, let's go ahead and start looking at some of these daily price charts. We'll start with the Dow. And I was looking at some of these when I had originally marked them up. We've got a new low here. So I redid my rising bottoms trend line. And when I drug it up, a copy of it here, it fit. So we're in a rising trend channel currently on the Dow. However, we do have a new PMO sell signal on the Dow. So that's, something we're going to have to keep an eye on. But to me, it's hinting at the fact that we're probably going to have to deal with some price decline. You can see all-time highs that were made this month. PMO buy signal still intact, moving up. And let's see, NASDAQ, we'll look at that one. And in this case, the rising wedge is still intact. So, of course, the expectation is a breakdown out of the wedge. PMO buy signal is still there. We had a little bit of a scare as the PMO came down and looked like it was going to give us a sell signal, but never did. OBV volume, it's still pretty much tracking with the rising trend. Weekly chart for the NASDAQ. And there you go. Nice big move, new all-time high. And you're looking at the PMO, it bottomed above the signal line, which is always especially bullish in my opinion, and it's still moving up.
That's the NASDAQ 100.
Yes.
You said NASDAQ.
Oh, yes, thank you. I do that. I do tend to do that. Okay. Rising trend channel on the OEX. A lot of whipsaw going on as far as the PMO. And you'll see that on the S&P 500, so I'll go into that a little bit more. The weekly chart, new all-time highs, and continuing to rise the PMO, so intermediate term picture still looks pretty rosy. All right, and here is the S&P 500, and similar situation. I was looking at a rising wedge at one point, but I, when I did my rising bottoms trend line, and again, just moved a copy of it up to the top, it matched perfectly, so I see it being in a rising trend. This is the issue right now, is this PMO, and you saw that on the S&P 100 chart. This bothers me. We're having some whipsaw, but it looks like today we got the buy signal back. So I did put that on the new scoreboards, which you can find on the homepage.
Incidentally, you see the OBV here does confirm the new highs. If you look at it, the SPY, the OBV on the SPY, you don't need to change it, but I'll just, just to point out, it is not confirming the new high.
And I know you're gonna.
That in itself is not a problem, because that just shows people are slowing down on the trading because it's getting so nice, going higher.
And I know you're going to be writing about that today in the weekly wrap, so don't miss that, guys.
Maybe not, but.
All right. PMO bottom above the signal line. PMO looks pretty good. It looks like it just accelerated a little tiny bit here as we did make the new all-time highs. All right, DP indicators, and then I'm just going to show you our sentiment chart pack, and I'll pass it over. All right, so I've been watching this VIX. You've got, this is inverted on a log scale. I use it as a sentiment indicator on this chart in coordination with what's going on with breadth. And what I was watching, originally we had that second test down here I was thinking we might end up going all the way to the bottom of the Bollinger Band, never really did. And I think that's a sign of internal strength. You've got, anytime I see a oscillation above a zero line or an average, moving average like this, I look at it as having some internal strength. But we did come up here yesterday. You can see that we had that pop. We didn't quite penetrate the upper Bollinger Band, but came very close. And look at the breadth. That's pretty intense, I would have to say, after you've had some really strong breadth readings previously on the readings. So I was looking at it, we were coming up and getting ready to puncture that band. I was looking at it as being a selling initiation, but obviously it hasn't come to fruition just yet, but it's something to watch now that we're seeing the VIX. It didn't penetrate that upper Bollinger Band, and it's coming right back down. So typically when you top on the VIX, that's when you're going to see a top in price, and vice versa, bottom on the VIX and a bottom on price. So that's why we watch it in the very short term.
I wanted to say something on this one too, if you don't mind.
No, of course not. It's way more interesting if it's a conversation.
Yeah. First of all, the penetration of the Bollinger Band actually didn't, it's just close. And this is one of those cases, with the expression, close only counts in horseshoes. Well, to me, it also counts where the VIX approaches that Bollinger Band, especially turned down. So I'd be looking for, in the short term, some kind of a pullback like we've observed, for the last month or so, just very shallow. I mean, that's at the very least I would expect that.
Yeah.
And also, it doesn't show up very well in this chart, but if you look at the new highs, notice how in June, beginning of June, you had a spike of new highs. That was kind of the initiation climax on this rally that we're in right now. But you notice as we go higher, each one of those new high spikes is lower and lower. Yep. And I see today it still didn't show us anything.
No, it's true.
Yeah, so that's weakness. And again, it's the short term, but short term stuff can turn into longer term.
Exactly. No, that's an excellent observation that I missed. So thank you very much. All right, S&P, we're going to look at the short-term indicators. I was thinking Wednesday that it was starting to look pretty good. We did end up with a top yesterday on the decline, and but we've turned it right back around. So we're still staying above that zero line, which suggests internal strength in the short term for now. Intermediate term indicators, it was the same situation. We got it turning back down. I thought it was interesting to see, as far as the readings go, that the volume one spiked a little bit back on the upside, but we got really not much action out of the breadth momentum oscillator. But overall, I mean, it's just we're seeing some hesitation, and we're not really getting a feel for the direction, I would say, at this point. But we'll have to keep an eye out. I usually don't pay too close attention until we get crossovers. That's just my personal look. All right, so I wanted to show you and everyone one of our lovely chart packs that you can get. These are free for now, and you can go ahead and download these, and you're going to get all of those sentiment indicators that I go through on Market Watchers Live. And, you know, from AAII, which is the American Association of Individual Investors, and that gives you a look as to what readings are currently. You can see your ratios. And remember, sentiment is contrarian. So when we start to see moves on sentiment where you have a lot of bullish activity, that's actually bearish for the market. Right now, I don't see anything overly exciting here because our bull-bear ratio is about 1. So we're pretty much equal. NAME is the National Association of Active Investment Managers, and this chart gives you how exposed they are to the market. And interestingly, I'm seeing they're getting more exposed, and so they're feeling more bullish, and that typically will be a signal of a possible decline. But a lot of times they're right. But the Wall Street Sentiment Survey, this is a survey that my dad and I take along with other market timers, and they ask us what you think is going to happen next week. And so that was really what we were looking at here. We have a lot of bearish activity that came in last week. And so now we'll find out on Sunday whether this is going to stay. But when you have a lopsided to the bearish side, that's, of course, again, sentiment contrarian. You're going to be looking for a move to the upside.
Okay. While we're here, let me make a comment here. First of all, this data is I originally came up with this survey, and I years ago I turned it over to Mark Young, and he does that weekly. And I think it would be a good idea to display this as a weekly chart, because people might be wondering why these are all the same, because it's a weekly reading. That's much better.
Yes.
And it's the fact the last two are the same. That is because the results are posted on Thursday, and after that, it puts an extra week in. It's just the way we did it back in the day, and it's not been changed. But anyway, that gives you a pretty good idea right there.
Right. These are the ICI mutual fund stats. These are monthly, and they lag by like 2 months. They're interesting to look at as well, looking at cash flow in the funds. But like I said, the last reading was May 31st, and we won't get the June 30th reading until the end of this month. So, and then finally, the other ones that we look at are our gold sentiment, that we use the discounts and premiums on the Sprott Physical Gold Trust. I'm not going to examine all these charts, so we're never going to have time for all of what we have. And then we also have the RIDEX chart that I go over. Like I said, it gives you an idea of where the money flows are going. And at this point, like I'm looking at this right now just from this week, and we're seeing a lot of rotation toward the bull sector funds and people getting out of the money markets. So to me, that tells me there's some bullish behavior out there. And again, sentiment is contrarian, so you should start thinking about a price reversal. All right, so that's what I have. I'm going to pass it to you, Dad, to show the big four and some of those grab bag charts. We got about 9 minutes.
Right, and I was interrupting many times there, partially to stall, because I'm not sure I'm going to have enough to fill the time. But Looks like I'll have just enough to get things done. Okay, what we have now is the dollar ETF, and it's breaking into new highs. Notice there's a line of resistance that has just got through this week, and it's kind of a long-term one. I'm going to go, even though the monthly chart is not final, I'm going to look at it because looking back here, there's another some highs that they made in 2008, and so that is possibly an area of resistance that might run into right now. But the PMO is really very positive here, so I'm not banking on the fact that it's going to turn around and go south.
Mm-hmm.
Gold tried to break out for us, but it got back into this what I'm still calling, it's a flag, maybe a pennant, but anyway, it's the same mechanics involved here. This is a line, this is a long term line of resistance, which is now support, and it's staying below that. It's very, very positive. Same thing, it'll go back and you can see the origination of that line of support. And this is very positive. I forget now, but between here, this is the bear market low for gold, and to here it's around 40% advance. I could stand corrected on, but it's been quite a good advance. But it's been so herky-jerky that people are still negative on gold, and so it's going to keep. It's probably going to surprise everybody one of these days, but it's certainly sneaking up in over a period of about 3 years there. Another thing that I'm noticing is that this is the correlation between gold and the dollar, and it's interesting. There's a cyclical movement here, which I haven't figured out what it is, but it's interesting at least.
Yeah, it's kind of crazy. Usually, it's a negative correlation.
Right.
They travel completely opposite, and right now we're seeing them really decoupled. So gold isn't necessarily right now, anyway, completely dependent on what happens to the dollar.
Okay. Here's USO oil. We broke down from a double top confirmation line here, but it got back up above it. I'm still thinking that it's going lower. Just taking his time about it.
Yeah, I think you could even make a case in the very short term for a reverse flag. So.
Yeah, I see that.
Both are negative, so.
Right, and here we have the weekly USO. It's basically flattened here for a period of time, and on the zero, it's just not showing any inclination to go one way or the other. And this trading range, this is 76 to 42. And I think it's going to stay within that. T-bonds, it looks like it's topping here. And we've got falling PMO, but you get a different perspective when you look at the weekly. You see we've got overhead resistance, which could encourage a top. but we know that they're going to be lowering interest rates with 90% sure this next week. So I have to assume that the yield on the 20-year is going to drift down also, which would imply that the price of bonds will go up. Here's a monthly, again, very positive PMO bottom on the monthly chart. And again, the yield is probably going to go down, which will send this up through that resistance. Speaking of yield, our yield array chart. We have, okay, the 1 month is still above the 3 month. There's a little bit of jerking around here, but mainly these are all shorter term
yeah, the Treasury.
What I'm trying to say is, yes, that the shorter terms are yielding, and generally speaking, more than the longer term. Here we have notice we're still thin on volume, even though it's going higher. It's very thin on the total volume for the S&P. And again, right. We talked about the VIX.
Mm-hmm. Yeah, and there's that on-balance volume for the SPY too. I know you were mentioning.
Right. And you can see that it's not confirming. Here are here's the IT trend model percent, SPX stocks. It's rolling over. Chances are it's going to start, it's going to head lower and for a period of time, who knows, but we are at a kind of near the extreme of the range. Here we have the Golden Cross percent index. It continues to go higher, but I think this is probably right about the limit of what it's going to go. But that's just my guessing.
Mm-hmm. Oh my gosh, it's just about time to wrap up. I'm going to give you one more chart.
Okay.
Real quick.
I think, the BPIs have started breaking down. So that's not a good sign.
Yeah, absolutely. Yeah, it's interesting. These indicators, we are starting to see some deterioration. And, so while price may be, pushing to new highs, it's not being totally confirmed. And when you start seeing, especially those long-term trend models, that's starting to turn, that IT trend model group, all of that's kind of signs of an underneath problem. So I think it's something to concern about. But I want to thank you, Dad, for being here first. And I want to thank all of you for joining us today. Please complete that survey. We'd love to get your feedback. DecisionPoint airs Fridays at 4:30 p.m. Eastern Standard Time. Have a great weekend and happy trading.